welcome back to another episode of Questions with Matt and Mark. Today is Tuesday, March 30th, and I'll start off with asking you first, Matt.
I love this.
SPACs have been in the news a lot lately. Can you just give people a quick 30-second overview of what a SPAC is?
Sure. So you see this a lot in the news right now. First of all, SPAC stands for Special Purpose Acquisition Company. And what it is an individual will raise money through an initial public offering, and then that new company or entity has a certain time period to use that money to bring a private company public to the market. So you see normal capital raises anywhere from 100 million, I see upwards of 500 or 600 million. And the goal is you're blanketly trusting that acquisition company to make a good decision. So it definitely comes with a lot of different flavors and risks, and I would definitely be reading that prospectus page for page. But definitely I would sit there and say in my own words, viewers, it's more of a speculative area of the market. They can be very complex, and it's definitely something you don't want to go into any investment lightly, but that's one that I would definitely do a little bit more due diligence. Best way to say it.
Yeah.
So my question for you, Mark, this week is in regards to the Federal Reserve. The hot headlines lately is in regards to what Fed Chair Powell has been saying about interest rates and monetary policy, the hot word inflation. Why don't you give the viewers your editorial slant on your opinion in 60, 90 seconds on the Fed?
Yeah, so the Fed has committed to keep interest rates low where they are through 2023, they actually said, Matt.
Yep.
I believe before the latest announcement, it was through 2022, but now it's through 2023. So the Fed has two main roles. Number one is maximizing full employment.
Yep.
And number two is price stability in the financial system, right? So when the Fed keeps interest rates low, that's usually a tailwind for risk assets such as stocks. Because if you think about it, if interest rates are low, that means the interest rate that you're going to get from your checking, your savings account, money market funds, certificates of deposit are going to remain artificially low. So if people want a decent return or a greater return than they can get in a money market fund or a U.S. Treasury bond, because when the Fed keeps rates low, Treasury interest rates are going to be low as well.
Yep.
Typically, like I said, it provides a tailwind for risk assets such as stocks. So really what I'm trying to say is that right now there's not a lot of competition in terms of assets to invest in to stocks right now. So with that being said, if the Fed does decide to keep rates low through 2023, then I think people are going to have a higher appetite for risk to get a higher return on their invested money.
Makes sense to me. Come back next week for another episode of Questions with Mark and Matt. We'll see you then.